And let me just get into what the new year holds for China, because it wasn't a great year over the course of 2021, but encouraging signs in the factory activity rate that perhaps the mainland market is weathering the onslaught of the latest variant. What are your expectations for this year?
Well, you're right. We've seen a bit of sign of stabilization towards the end of 2021, with the PMIs actually coming in a little bit better than expected. But remember, that's off of a very weak base. In October, November, the economy had pulled back substantially. So this is more stabilization and perhaps an off to the races again kind of signal. Going into 2022, there are two key things we're watching. One is what's going to happen with the virus. We're already seeing a bit of outbreak in parts of China. The more this spreads, the more this reoccurs, the more it's going to take its toll on economic growth. The second thing is, are policymakers going to hit the gas on policy, or are they going to act with more restraint? And the chances are they're going to be a bit more restrained this year than many investors seem to expect.
The themes that some investors have been steering about has been the self-reliance policy, a sort of push back against globalization in effect, as you see China fine-tuning various policies. How big a theme do you think that is going to be as investors navigate some of the Beijing regulatory headwinds in 2022?
Well, regulatory risk certainly will still be there. It will never disappear entirely, but we have seen some signals by officials in Beijing over the last few months that they say we get the message. We need to have a more calibrated approach. Going in too aggressively is very destabilizing. Remember that some of these policies are justified. Some of them are perhaps more politically motivated. But by and large, there seems to be a recognition in Beijing that things need to be flagged better to the market to bring in more stability. The securities regulator, for example, has hinted at the fact that we need to have a bit more runway before we announce these new policies, kind of soften up the market, kind of make the market understand why we put these policies out there. So there will be more measures to come for sure, but the good news is that possibly we're going to get a bit more of a strategic rollout of these particular announcements.
Frederic, I want to ask you about monetary policy, because as we talk about central banks globally moving towards the exit, the Fed very much in everyone's sights of this expectation that it's expected to tighten 2, maybe 3 times this year. Where does that leave the PBOC? Because I know you're expecting some form of easing here, but just how much easing can you have when you've got a Fed that could be effectively retreating from extraordinary stimulus?
Well, you're looking at what I would call the big divergence in 2022. The Fed hitting the brakes here, raising rates 2. We actually think 3 times this year, possibly even going to quantitative tightening. The PBOC under pressure actually do the opposite. Don't worry about inflation pressures. This is all about growth at the moment in China. That would require potentially further easing at the margin. How much of a constraint is the Fed tightening here? Not that much. The PBOC can still deliver some easing. Remember, the currency is strong, the balance of payments is fairly robust, so the PBOC has some independence. The only thing holding them back is the fear of reflating the property market too quickly. It's local debt that is a constraint to monetary policy. It is not so much the Fed.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.